VICI Properties Stock, a 5% dividend yield REIT focusing on casinos and many more. VICI Properties was formed in 2017 as a spin-off from Caesars Entertainment Corporation. Right now, VICI Stock is down roughly 4.4% year-to-date in stock price. So, is VICI Stock a buy right now? In this video, I will show you everything you need to know about VICI Properties. I will show you what VICI Properties does, and I will show you my fundamental analysis to see if VICI Stock is a buy right now. I'm very excited to see what you guys think about VICI Properties, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stock at great prices. Please subscribe to join the community and to receive multiple analysis every week, where I will tell you everything you need to know about the stock market. So, what does VICI Properties do? VICI is an experiential real estate investment trust that owns one of the largest portfolios of market-leading gaming, hospitality and entertainment destinations, including the world-renowned Caesars Palace. VICI's national geo-diverse portfolio consists of 28 gaming facilities comprising over 62 million square feet and features approximately 25,000 hotel rooms and more than 250 restaurants, bars, nightclubs and sportsbooks. In this chart we see the geo-diversification. 45% of the properties is within Las Vegas, and the other 55% is located in the other states, but all with the focus on the experiential in real estate. Here we see that VICI has a total investment volume of 20.5 billion and has a 1.9 billion in rent income acquired. Another great thing to see is that the annual investment revenue and announced investment revenue are increasing every year. This is something that is key to this business. Here we see that VICI is focusing on triple net leases and has 8 best-in-class tenants with the biggest amount of Caesars Entertainment with 42%. A triple net lease is a lease agreement on a property whereby the tenant promised to pay all the expenses of the property, including real estate taxes, building insurance and maintenance. Another thing I like to see is that 100% of the rent in cash is collected. Here we see the comparison of VICI versus some other REITs. In my opinion, it's not the best comparison because they are operating in different industries, but just to give you an idea. VICI has a very long weighted average lease term in years versus some other REITs. This means you don't have to worry in the short term for a consistent revenue stream. Next to that, VICI has the strongest earnings growth versus some other REITs. To me, it shows that this stock could benefit a lot if earnings are increasing every year. If we check the dividend yield and the FFO payout ratio, we see that VICI is doing a great job. It has one of the highest dividend yields and compared to the other, a low payout ratio. Next to that, dividends are increasing very nice and steady, so it's likely that they will stay within the top 3. Another thing which is very nice to see is that 80% of the rent roll is from the S&P 500 tenants, so you are talking about some big names. A very important thing in the investor presentation is that VICI aims to deliver a 10 to 12% target total return to the investors, based on the external FFO growth and same-store FFO growth, and in the last part, the dividend yield. An interesting number here is the 2.6% annual same-store growth, which is needed to grow the business. This is very important because when this number isn't increasing, VICI will grow only because of acquiring new locations. So it's very important that this number is growing. So now that we know more about what VICI Properties does, it's time to check the historical stock price performance. As mentioned before, VICI went public in 2017. Since then, you have gained a total return in stock price of 58%. The S&P 500 did return 75% since then. So with owning the S&P 500, you did a better job if we check the historical stock price performance. If we check the year-to-date chart, we see that VICI is down roughly 4.6%, while the S&P 500 is down 5.6%. So it's almost similar to each other. Most importantly is, how will the future performance of the stock price be? To help you a bit more, I will show you my fundamental analysis and give you my opinion about VICI stock, and if I will buy this stock or not. So, VICI Properties has a market cap of 21.6 billion and has an enterprise value of 25.8 billion. The current PE ratio is sitting at 16.4, which is quite low, but please keep in mind that REITs have a lower PE ratio in general. The forward PE ratio is sitting at 14. The operating margin is sitting at almost 95% and profit margin is sitting at 67%, which are both insanely high. REITs have a higher margin in general, but with this number, it's really, really high. So I think this is one of the better things about VICI. The management effectiveness is a bit low, to be honest. Return on assets is sitting at 5% and return on equity is sitting at 9.4%. You want these numbers to be above 10% at least. The 12th trailing month revenue is sitting at 1.5 billion and the quarterly revenue growth year over year is sitting at 2.7%. To be honest, this is quite low. In this graph, we see the revenue growth since 2018. We see that from 2018 to 2020, it's nearly flat in revenue. And since then, it's increasing in big amounts every quarter. That's something I really like to see. If we check the balance sheet, we see that VICI has a total cash of $739 million and a total debt of almost $5 billion, meaning they are able to pay only a small amount of the total debt, which is something I don't like to see. I think the debt is too high with this amount of total cash. Companies use debt to grow the business, but it's really important to keep the debt at a healthy level and to have enough cash to pay down at least a big chunk of this total debt. The operating cash flow is sitting at $896 million and the leverage free cash flow is sitting at $607 million. As mentioned a second ago, free cash flow is used to pay down debt. But next to that, a company uses free cash flow to buy back shares, do acquisitions, pay dividends, and all other things. So it's really important to have an increasing free cash flow, since this will help the business to grow and in the end to reward the investor. Here we see that free cash flow is increasing in big amounts every year. So that's something I really like to see. This comforts me a lot because debt is too high in my opinion, but with the increasing free cash flow this shouldn't be a problem anymore in the future if they are continue to grow the free cash flow in these amounts. As mentioned, companies use free cash flow to pay dividends. We see that VICI has an increasing cash dividends paid every year. This is because of increasing dividends but also of issuing new shares. This is an important number to keep an eye on. You want them to have enough cash to pay the dividends, of course. So since we are talking about dividends anyway, VICI pays a 5% dividend yield and an annual payout of $1.44. The payout ratio is sitting at 78% right now, and there's no current 5-year growth rate because they are public since 2017. So it's not possible to have a 5-year growth rate. They increased the dividends for 3 years in a row. If we check the dividend payout history, we see that in 2018, VICI paid an end quarter dividend of $0.28. Since then, they increased the dividend slow but steady. In 2022, the dividend is at $0.36 in the first quarter and will likely end with a fourth quarter dividend of $0.39. As I already said, nice and steady. My conclusion is that VICI is an interesting company. They pay a good dividend of 5%, which is very attractive to a lot of people. We check the properties, which are also very interesting. They are really focusing on specific industries and they are trying to be the market leader, which is something I really like. The valuation of this company is pretty decent if we check the PE ratio, revenue, profit margin and increasing free cash flow. But right now I don't like to see the debt at this level. This is something to keep an eye on. Next to that, with the increasing shares outstanding and increasing in dividends, you want to keep an eye on the payout ratio. Whenever this company is not able to pay dividends anymore, you might have a big problem, and maybe a big sell-off will occur. In the last part, and this is really important to me, since VICI went public in 2017, they had a stock price return of 58%, while the S&P 500 had a 75% stock price return. To me, this is a huge difference. With owning the S&P 500 ETF, you easily beat VICI in the past years in terms of stock price. But that doesn't have to be a fact for the future. So right now I'm between a hold and a buy signal, I think. It all depends on what your strategy is. I'm focusing on dividend growth stocks and growth stock in general. VICI is neither one of them. They are just a dividend stock, which is fine and nice to have, but not for me. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.